All right. Hello, everyone. Thank you for joining us today for our webinar. We're very excited that Amie Kuntz will be presenting the 2020 tax update. Amie is part of RubinBrown's national tax group, providing tax consulting primarily for privately held businesses and high net worth individuals. She has over a decade of diverse tax experience in both public accounting firms and large private companies. An Iowa State University graduate, Ms.Kuntz holds a BS in accounting and Master's of Accounting with a focus on taxation. She is an author of PPC's Practitioner Tax Action Bulletins and contributing editor to various PPC products, with published work also appearing in the Tax Adviser and local publications. She is a frequent presenter on technical tax topics and has been quoted in several publications on tax matters. She is a member of the AICPA and serves on the taxation and legislative committees of the Iowa Society CPAs. We are pleased to present this webinar as a member benefit of AFWA. A few housekeeping items before we begin. This program qualifies for one CPE based on 50 minutes of instruction and questions and answers. To qualify for the CPE, you must be on the webinar for the entire time and you must participate in all 3 polling questions. CPE certificates, evaluations, and the slide deck will be sent out within 1 week following the webinar. And as a reminder, we encourage you to use the chat function to network with other attendees while the webinar is going on. Feel free to use this section to ask questions for the speaker or other attendees. We have a lot of material to cover today, so if you have any questions, please write them in the Q&A section, and our instructor will answer them either during the polling break or at the end. And just a reminder that evaluations and certificates will be sent out within 1 week. So please welcome our presenter.
Hi everyone. Cindy, real quick, I have 2 polling questions, but I don't have an actual poll to do. How are you guys handling that? Do people just type in their answer, or what do we do there?
Can you repeat the question? Sorry.
Oh, okay. I only have 2 polling questions, and I hope that's okay. And then they're not like actual polls, they're just questions, and what I've done before is people just write in their answers. Does that work for you guys, or how are you handling that?
I think that we have our own polls, so they can answer your polls in the chat, and then we will also launch ours on our end.
I got you. So I don't have to worry about it. They're kind of like silent polls?
Yep.
I got you. Okay, I won't worry about it then. I'll just skip my polls.
All right, perfect.
Sounds good. Anyway, thank you for having me. I really appreciate being here today. I'm excited to talk to you guys. I really love this group. I was very active in my local chapter in Des Moines, Iowa for several years, but unfortunately I got pulled away, just being really busy, but I know we all are busy, so I hope to rejoin you and all of society one day when my schedule actually calms down. If this December stimulus bill hadn't dropped, today we're going to cover a lot of that, but if it hadn't dropped, we'd be having a much different conversation. But I wanted to make sure that we cover it because there are a lot of important things for us to understand on the tax side and the PPP and grant programs too. So that is where we're going to focus most of our time today. It's going to be a little fast. I don't know if you guys have the slides already, but there's 100 slides. I'm not going to hit all of them in detail, but for my tax pros out there, I wanted you to have it as a resource more than anything. And I will try to answer questions as well, probably more towards the end, or if I have a natural break, I will take a look and see if I can see some questions. But otherwise, probably save it till the end and go from there, okay? All right, let's just dive right into this bill, right? So after months of debating, Congress finally came together and made a second stimulus deal. It was at the very last minute, but they ultimately did get it passed, and they called it the Consolidated Appropriations Act of 2021, or the CAA for short. And you'll hear it also called the EAA as well. That was part of the CAA, but I refer to it as the CAA So when you hear me refer to the CAA, we're talking about this big stimulus bill. And it is big. It was 5,500 pages long. It includes a lot of things though, because it was trying to accomplish a lot of things all at once. You know, it had annual federal government spending in it. It extended a lot of the expiring tax provisions. It had new disaster relief provisions included. And also it provided $900 billion of pandemic related assistance that everyone was kind of waiting for since the first round was passed back in March, if you remember, with the CARES Act. So we waited a really long time for this to get done. So what exactly did we get out of this big old bill? So for pandemic relief, you know, we got stimulus, another round of stimulus payments. We got the reopening of the PPP, which is today for a lot of people. The employee retention credit, the ERC, that was given new life. We'll talk about that. That's very important for a lot of businesses. There's a new grant for shuttered venues that's very important that we'll also spend some time on. There were unemployment benefits. That was really important. At year end, they were about to cut off. And so that was very important. And part of the time crunch for the bill to get passed was to help those people on unemployment. So that was extended as well. And we also did see some changes to credits and deductions that are important on the tax side. And as I said, they also addressed the extenders and disaster provisions as well. So the first thing we'll cover is just those stimulus payments, because that's probably what you've heard the most about, right? It was the most publicized part of the bill, and it was really hotly debated in Congress, actually, even up until the very end of negotiations. This is one of the issues that was actually threatening to stall or even kill the bill, if you remember all that. But despite, you know, kind of those last minute politics with the president and everything, the bill got signed. And, you know, we've seen that the second round of stimulus checks has been sent out for those who were eligible. The amount this time was $600 for individuals and $1,200 for married couples filing joint, with an additional $600 for every dependent child under age 17. That part did not change. It's still under age 17 for that, for the first and second stimulus. The way the second stimulus works is really similar to the last round. So aside from the dollar amount of the payments, you know, it's really similar. There's still an AGI phase out. It's not included in taxable income. I can't stress that enough. I see a lot of confusion there. These economic impact payments, these checks, whatever you want to call them, they're not included into taxable income, okay? And the immediate payment was still based on a look back of prior year information to determine those amounts that were getting sent out. And again, really important to understand, these are advance credits that are going to be reconciled on the 2020 individual tax return, just like the first set that went out. So they actually had only
Hi,
until,
Amy?
yeah.
I don't think your screen share is working. It's certainly not working for me.
Oh no, oh my gosh, I'm so sorry. Hang on one sec. Oh, thank you. Okay. You know, I'm just going away here with my slides going.
I had put things in the chat and stuff, but
I couldn't see it. Okay.
yeah.
Well, let me share my screen. Hang on. Okay. Boom, boom.
There we go.
Now?
Thank you.
Oh my gosh, I'm so sorry. Geez. Thank you for interrupting me also. You know, I just gave this presentation to my local chapter. So I probably thought I was just good to go, but okay, here we are. All right. So they actually had until January 15th to get the payments out. If you didn't get a payment by then, or you didn't get enough based on the rules, then you ultimately will be made whole when they calculate their recovery rebate credit on the 2020 individual tax return. That is, again, just super important to understand, because I've seen so much confusion on how that works. So just make sure to know that the payments are, again, an advance credit taken on the 2020 return, and it's a really taxpayer-friendly reconciliation. It's a one-way true-up, calculating what you should have gotten using 2020 information, rather than using prior year information that was used to get payments out to people really quickly instead of making people wait, to see a benefit by filing their return. That's why they did it the way that they did. So how that reconciliation works is if you actually got more in your advance payment using the prior year information than you should have using 2020 information when you go to file your return, there's no payback requirement. There's no payback mechanism. So it's very taxpayer favorable. You just keep it, okay? And like I said before, if the opposite is true and based on 2020 information, you should have gotten more of a payment, it will come through as a recovery rebate credit. That's what it's called on the return, recovery rebate credit on the 2020 individual return. And we're already talking about round 3, right? As soon as the ink was dry on the CAA, we've already been talking about more as part of President Biden's recently released plan for his additional relief. I will just caveat there. Even now that the Democrats have control of both the House and Senate, we need to wait and see what happens, okay? I would argue the same approach is needed when discussing any other changes with the tax code as well. Even though there's big stuff out there, the Democrats do have control, but their margin is super thin. So I wouldn't bank on any slam dunks here, when it comes to new legislation, or even, I'm sure we will potentially see another stimulus, but I just don't like to talk uncertainty right now. It's just it's so close, we just really need to see if it's going to be a bipartisan effort like they're trying to do. Here's your first polling question. I don't think I have to answer these. Hosts cannot vote. Okay, I'll just close it. So aside from stimulus, the bill has several loan and grant program enhancements too. The EIDL Advanced Grant is again available and allows qualifying businesses who may not have received that full $10,000 advance from the first round, they can reapply for the difference now. So if you remember back in the CARES Act, it said you could get up to $10,000 of an EIDL grant. And then the SBA later came out and said, well, we're changing that. You only get $1,000 per employee. Well, that wasn't the intent of the law. And so the CAA went back and Congress said, that's not what we said. You get $10,000, but now there's some restrictions. There's some requirements that go along with that. With this, if you want to go back and get the rest of your EIDL, you have to be in a low income community. That's based on, I think, like the new markets credit. There's some zoning that goes along with that. You have to have no more than 300 employees. You have to have suffered an economic loss also of greater than 30%. So there are some restrictions to this one now, but if you're in that group and you didn't get all of your EIDL grant, this could be something definitely to look into. And so those programs, the EIDL and those loans, those were already part of the CARES Act back in March, right? This next one we're going to talk about is new. It's brand new with the CAA, so we're going to spend a little bit more time with it, okay? Congress basically realized that the economy was recovering differently for different industries, and I would say that's correct. One of the hardest hit industries is beloved to a lot of people, myself included. It's been really rough for people not to be able to see concerts or go to a museum, just get out and do the things that you normally do to de-stress and enjoy life, right? And obviously, those venues are suffering too, not having any crowds to be there. So the CAA recognizes this and gives them help in the form of a new grant. People have been calling this grant all sorts of things. So you might hear it referred to as the shuttered venue operators grant, the live venues grant, or the SOS, which I thought was cute. It's called Save Our Stages grant as well. The SBA refers to it as SVO, and so I will do the same. Either way, it's basically a new grant program for live venue related businesses for up to $10 million. So how do you get it? Who qualifies for this new live venues SVO grant? There's 4 main categories of qualifying businesses. You've got your kind of live venue operators, that's your promoters and producers and all of that. That does include people who sell tickets to these events. Also, I want to point that out. Also, your relevant museum operators, and I believe zoos and aquariums fall into this as well. You have movie theaters that can qualify. And also, they decided to include talent representatives in this grant opportunity as well. They didn't include the performers themselves, which I thought was odd, but talent reps are included here for this grant. So, I mean, this grant is available for a lot of businesses, a lot of different categories, for profit, not for profit. It has the potential to be pretty helpful. The next couple of slides get into greater detail on what each of the 4 categories means to help businesses understand if they qualify. Just in the interest of time, we're not going to go through them in detail, but I wanted to provide them for use in case you're in this world and you want to see if you qualify. So then also make sure to note that on top of having a qualifying business type, there's also venue requirements for each of those business types as well. The next slides are going to go through that for you also in great detail. But again, in the interest of time, we're not going to cover them each, but I want you to have them here. The requirements are really specific for both industry type and also for venue type as well. So just make sure if you're trying to apply for this that you read through the rules carefully and make sure that you actually do qualify. The SBA.gov has a website dedicated to this grant now. They finally do. It doesn't have a ton of information. My slides actually have more information than the website does right now, but it said that there's more information coming. So you will have that available both in these slides, and you'll definitely want to check out what the SBA comes out with, because we've seen the SBA make their own little quirks too. So then once you know that you are a qualifying business type and you have met the venue requirements as well, you're still not done yet, unfortunately. This is a really onerous testing that they're doing to help people here. But so you have to satisfy 7 more tests actually. And you can see them here and on the next slide. You have to be fully operational as of February 29th of 2020. You have to have a reduction in revenue of at least 25% in a quarter when compared to 2019. You have to plan on reopening or be reopened. You can't be closed down or be closed down permanently. You also have to be a small business who doesn't have any significant federal funding. I thought that was interesting. I wonder if some of the nonprofits or museums would get hurt by that one. I'm not sure, but I thought that I wanted to point that out. You can't be a strip club or anything sexual in nature. They threw that in there just because that's part of the other SBA programs as well. They don't make the rules, that's just part of it. And then the one I want to make sure to point out here is that a business can't obtain a PPP loan after December 27th, 2020 and also get this shuttered venues grant. They don't play together. So make sure that you understand that. It's going to be one or the other between reapplying for PPP1 or getting a second PPP loan and one of these grants. But if you do get through all these hoops, the last thing they're going to make you do is certify that the grant is needed because of economic uncertainty caused by COVID, okay? Which realistically, right, shouldn't be that hard for this industry, considering, gathering in groups has been halted or discouraged for nearly a year now. So this industry is hurting. So then if all the pieces fit, you can start looking at how much of a grant you can get. And you can see that it's generally 45% of 2019's revenue up to $10 million. And if the program still has fund, it's only got $15 billion. And I know that sounds big, but this is a big industry. So I don't know if the second funds will still be available, but they do allow for potentially a second grant equal to half of your first one. We'll just have to see how quickly the funds go first. And at this moment, on that note, we don't know when it's going to start yet. We don't know when it's going to be rolled out. But when it is, The first 60 days of the program are limited to businesses with 50 or fewer employees. And then within that time frame, the first 2 weeks are going to go to the hardest hit businesses, having lost at least 90% of revenue. Then the following 2 weeks, those who've lost 70% of revenue. So they're trying to make sure those who are really in need and are small get a chance at the money first, because like we saw with the PPP, the big businesses swoop in right away, right? They have the relationships, they have the manpower to get these applications in. So with this grant, they're saying, we're giving the small guys first crack, okay? After 60 days, everyone can have a chance. Once you do get a grant, if you do, the money has to be used for expenses incurred from March 1st of 2020 through December 31st of 2021. There's additional time with the second grants as well. If the money isn't fully used, it's got to be returned if it's not spent within a year of the grant disbursement date. And just like the other programs that are similar to this grant has restrictions on what the funds can be used for. If you're familiar with the PPP, it starts out looking a lot like the PPP, same kind of expenses, but it also includes more maintenance and administrative type expenses that are specific to this industry. So it's like the PPP, but just bigger of what you can spend your money on. The rules do say, though, specifically that the money can't be used for real estate purchases, lobbying, investing, relending funds, or paying loans originated after February 15th of 2020. So those are things you definitely can't spend the money on. And then, finally, we see something tax related. This is supposed to be a tax update, right? But it is interesting how tax and audit and accounting people have been thrown into this loan and grant world just so much. It's been a lot for everybody, but us as well. The reason, though, is we're trusted advisors, right? Along with the forms that are being required are a lot of tax and accounting forms, but we are trusted advisors. And, truly the accounting industry, in my mind, has majorly stepped up to help businesses stay afloat here, which is something I feel like we should be, proud of, helping all these businesses. Anyway, the live venues, the SVO grant, it's not taxable income. It's and any expenses paid with the grant money is fully tax deductible. So you're good to go there. So you have your crash course now on this wonderful grant that hopefully will seriously help save our stages. And if, like I say, if that's your world, even though it's not open yet, get your ducks in a row and see if you could qualify. Okay, we're not going to spend too much time on unemployment, but it was part of the bill. I just wanted to make you aware that they did make some changes. Like I said, 12/31 was an important date for people on unemployment. They extended a lot of that, and they brought back some of the additional weekly funding. Remember, there was 600 before, now it's 300 right now. And then there were some meaningful adjustments to credits and deductions that we should just spend a couple minutes with too. We'll start with what used to be everyone's favorite, I guess, back in the day when we could actually get together, the business meal deduction, right? This change was actually an attempt to help restaurants. So for 2021 and 2022, business meals from a restaurant, and I think we'll need some guidance on this, on what exactly that means. Those will be 100% deductible now rather than 50%. So make sure to note that this is not for 2020, okay? Charitable contributions also saw some love here in the bill. Many of the nonprofits are hurting as well. So that was good to see. So now we have the $300 above the line charitable donation deduction for those taking that standard deduction. That's extended into 2021 now as well, not just for 2020. And then also on that one for 2020, married filers can take a $600 above the line deduction rather than the $300 they're limited to in 2020. Because remember, in 2020, doesn't matter your filing status, married versus single, it's $300. So it's kind of a marriage penalty there, but they fixed it for 2021. Why they didn't make the change for 2020, I can't tell you. What I can tell you is they increased the penalty for falsely claiming this deduction. So they are trying to say here, they realize pretty much every standard deduction filer is probably going to put $300 on their return, right, as a charitable above the line deduction. But you better have your documentation to back it up because the penalty has been increased. They're just trying to enforce compliance and make it not just some arbitrary amount people are throwing on the return. Anyway, also the increased income thresholds for taking certain charitable contribution deductions, those were extended through 2021 as well, rather than just being for 2020. And then the last point on the slide, there's also a special rule for those taking the earned income credit and the child tax credit. You can use 2019 income rather than 2020 if 2020 is less than 2019. So the way this works, then theoretically, you would, this is theoretically beneficial and it would increase the credit if you had a higher amount to work with. And then I'm not entirely sure I know any business that did the optional employee payroll tax deferral that was, remember that presidential memorandum towards the end of last year. But if you did, the bill extends the amount of time to pay back that deferral through the end of 2021, rather than having to pay it all back by April 30th of this year. So that's available if anyone did that. And then another positive change was that teachers can now include PPE, that's the personal protective equipment, and other related supplies to preventing the spread of COVID. They can use that towards their $250 above the line deduction. But I mean, realistically, all the teachers I know max this out pretty quick. So it might just be a nice gesture, but maybe it'll help someone out, who knows. And then finally, taxpayers can also roll unused health and dependent care flexible spending amounts from 2020 to 2021, and then also from 2021 to 2022 without disqualifying by deviating from the normal plan restrictions. So you can get potentially roll more things than you were able to do before. And then the paid sick and family leave credits, that's under the FFCRA. Those were extended from the end of 2020 to March 31st of 2021. And self-employed taxpayers actually can elect to use the prior year net earnings for potentially getting a higher credit. It's also important to understand that the mandate from the FFCRA for companies to pay wages while employees are on those two types of leave, paid sick and paid family leave, that part was not extended, but the bill puts in language to kind of act like it was, so that the credits can still be taken if the employer chooses to pay wages for employees during that time of leave. And then the farming NOLs, this was the only mention of NOLs that I recall seeing in the bill. Usually there's a little bit more to do with NOLs. Anyway, but farmers can elect to retain that 2-year carryback of an NOL rather than claim the 5-year carryback that was provided in the CARES Act. They can also revoke the election to waive the carryback of an NOL if they want to now take that. The last couple of slides, they're going to be less common items, but they're here if you want to read through them. I just included literally everything in the bill for in case someone wanted to look that was potentially tax related. I will highlight on the second bullet point here for depreciation of pre-2018 residential rental property over a 30-year period now, rather than ADS, for ADS rather than 40. So that is a positive change for those electing real property trades or businesses trying to get out of 163J, the business interest expense limitation rules. Let me just see if there's any questions, if I can see them. Sometimes they go away. No, I can't see them. I'll try to come back to them at the end if you guys have any questions. But now on to extenders. So if you're in the tax world, you kind of know that every year or every 1 or 2 years, Congress has to do this little dance, right? Of, are they going to extend several expiring provisions, or not. And luckily for us, so it's not retroactive, they were not forgotten. They were addressed in the bill. We're not going to cover them all, but they are all here for your reference if you want to take a look. Some of them are actually made permanent, which is a great thing, right? I mean, in my opinion, the more we can get away with this continual kick of the can down the road and uncertainty, the better. I'm sure we are very tired, all very tired of continual changes. I mean, I've heard people say job security, but I mean, we're exhausted. We would like just a moment of things staying the same for a little bit. So we do have the lower AGI threshold here for seeing a benefit for itemized unreimbursed medical expenses. That is now permanent. That is 7.5% versus 10. So that's good. And we also have made permanent the 179D deduction that allows for quicker tax benefit for making energy efficient improvements to commercial buildings. And the one more note I'll say is they let the deduction for tuition expenses expire, but at the same time, to try to compensate for that and maybe lump it all together, that they increase the phase out thresholds on the lifetime learning credit. So just be aware of that one being gone, but an increased phase out for the other credit. There are also several favorable alcohol related provisions that were made permanent as well. So if this is your industry, be sure to take a look here if you already haven't. And then this time they extended several provisions for 5 years, which at first blush, you know, you might see that might seem strange to you if you're a tax person, because generally they do it 1 or 2 years at a time, they'll push it out. But if you remember, all of those individual provisions of the TCJA, they also sunset in 5 years too. So they are setting up 2025 to be a big year for extenders, unless everything changes again, which is entirely possible. But that's some people's belief of why they extended some things for 5 years. Anyway, we have those here for you, and they include the work opportunity tax credit, which I can't believe hasn't been made permanent yet. But anyway, it was extended 5 years. Tax-free forgiveness of principal residence mortgage debt forgiveness, the CFC look-through rule, and they decided to keep allowing employers to pay the employees' student loans tax-free to the employees as well. If you remember, that change came about in the CARES Act. The employer-paid FMLA was also extended 5 years. That one, if you're not familiar with that, that's the new employer credit for paying employees who take FMLA. If you remember, the FMLA is not required to be paid. If I remember the rules right, you can't lay someone off, or you can't fire them when they're on FMLA, but you're not required to pay them when they're on it. So this credit is just trying to incentivize companies to do it. And the last couple of slides show which provisions were extended through 2021 only. We have several energy related credits here. We also have the mortgage insurance premium deduction that a lot of people take. More energy credits here on this slide. And I will just point one out on this one. Make sure you're aware of this energy efficient homes credit. It's $2,000 per home and has lots of builders that could potentially qualify for this, since there's been such a green energy push in the last several years. So if you got developers or builders, make sure you're looking at this one. I'm sure they probably already are, but I wanted to point it out. The next topic I have for you is the disaster relief provisions that were included in the CAA. We're not going to spend a lot of time here, but just be aware that it's part of the bill for clients that may have been involved in a major natural disaster. And I want to point out that these provisions here are not for COVID, okay? Even though 2020 was arguably seriously a disaster of a year when we went through a national pandemic and it was actually deemed a disaster. This part is for your typical natural disasters. You think of fires and floods and all that happen. Those things unfortunately still did happen in 2021. So these provisions are trying to help those who went through that. So if you were affected by one of these major disasters, you'll have the opportunity to use retirement funds, kind of in that same flexible manner that was available, that is available with the CARES Act for COVID. So there's no early withdrawal penalty of up to $100,000. You can repay it over 3 years. It can be included into income over 3 years as well, rather than having to put it all into income in the year of withdrawal if you're not going to pay it back also. And then I just want to point out this one, don't get this confused with the other employee retention credit. The disaster provision has its own employee retention credit. They're called the same thing, but they have different rules. This one is worth up to $2,400 per employee if your business was located in a disaster area and was inoperable due to the disaster. So just make sure to know this exists if you've got a business that might have been affected by a natural disaster. I do want to point out there is a negative interplay with the PPP for this ERC, as well as we'll see in a little bit for the CARES Act ERC. So wages can't be used for both. You can take both, but wages can't be used for both. And then finally, there's a couple other provisions to round it out here. You have the enhanced charitable deductions for corporations, and also personal casualty losses for individuals. Don't forget that for disaster areas. Okay. Let me see if I can find those questions. Oh, there it was. Okay, let's see. Oh, copy of the presentation. I'm assuming it will be sent out. Is that I'm going to assume that's right, that it's going to be sent out to you. I have sent them on, but I will make sure that you guys get a copy of this as well, because like I said, this is meant to be your resource, right? I don't love when there's a presentation and it's just not useful after the presentation is over. I really try to do overkill on these slides. So sorry if they are inundated with information, but I want you to get something out of them afterwards, right? Okay, let's talk about this employee retention credit. This is a big deal. It's not new with the CAA, but we'll see that it's become really important for businesses because some significant changes were brought about by the CAA. The CARES Act actually introduced this credit to employers facing hard times because of the pandemic. But many employers didn't previously utilize the ERC due to the fact it was unable to be taken with the PPP. You couldn't take them both. So you had to make a decision right away. Am I going to take the ERC? Am I going to take the PPP? And when we were analyzing this in the beginning, for most people, the PPP was beneficial over the ERC. So they don't even know about this, and they need to, because the CAA has retroactively removed the requirement that you can't take both. So all of a sudden you can take both. And that's why there's a big line through that on the bottom of that slide. I left it there intentionally, just to see that that was a big change that was made. Okay, so the ERC is newly available now for 2020 periods to potentially millions of small businesses who had taken the PPP instead. Also, the CAA extended the ERC into the first 2 quarters of 2021 now, and brought some other favorable changes for 2021 in itself. You almost have to think of 2020 and 2021 as 2 different ERCs, kind of, just because there's different rules. But main point, if you aren't aware of the ERC because you took a PPP, I want you to look now. Make sure your clients, your businesses look now at the ERC. It's a fully refundable payroll tax credit designed to help employers who maintain employee payroll during qualifying periods, and we'll get to what that means in either 2020 or 2021. Also, the FAQs that are at the bottom of this slide, make sure to check those out for detailed questions. We're not going to cover all the details. It's a very intricate credit with a lot of different rules, but there are great FAQs out there, and they haven't been updated for the CAA yet, but I'm presuming that they will, because that's the only guidance that we really have until they do more formal guidance on this ERC. So who qualifies? You either have to have employees, number one, right? It's an employee retention credit, so you got to have employees. This is one of the only ones where self-employed people with no employees don't qualify. So that's not, this one isn't for you. Got to have employees. You also have to have been negatively impacted by COVID-19. And they determine that by meeting one of two tests here. You'll see either the business was fully or partially suspended its operations due to a COVID-19 related government order during a calendar quarter, or you experience a drop in a year-over-year receipts, okay? So I also want to point out that make sure to note this credit has no size limit in taking the credit, like the PPP and the other SBA grants do, you know? So large employers, like I say, they probably already took this. They probably already know about it, but smaller ones, you know, under 500 employees that took the PPP or some other provisions, they probably are just learning about this for the first time, potentially, even though it's been around. So if you qualify for the government order of suspension, the business actually has to have been limited by the mandate, not just subject to them. So you have to have been negatively impacted by a government order for that one to be met. So for example, a lot of accounting firms couldn't take the ERC because, you know, we were nimble and able to just continue our operations working from home. We're already working 1 million hours anyway. What's the difference where we're doing it, right? So we weren't super impacted. There was no big limitation in our industry. That meant a lot of the accounting firms can't take the ERC. A partial suspension, there's good examples in the FAQs, but that's where a business is still allowed to be open, but it may not be able to continue all of its typical operations due to the imposed restrictions. You could think of a restaurant here maybe that was limited by a government order that said you can't go in the restaurant to eat, you know, so you're limited there, but maybe you can have someone drive through, maybe you could have them take out, things like that. That would be a good example of a partial suspension. Qualifying for that revenue reduction test, that depends on the year, whether it's 2020, 2021. So for any quarter in 2020, the gross receipts from the trade or business of the employer have to be less than 50% of what they were for that same quarter in 2019. Once this happens, every subsequent quarter in 2020 is an eligible quarter until the end of the quarter where the business's receipts have returned to at least 80% of what they were for that same quarter in 2019. And I know I'm saying this and it's just like, oh my gosh, but just have it here on the slides. The FAQs lay it out really well. There's great examples of this. So just know that there's some restrictions to work with there, okay? For 2021 though, the decline in receipts test is the same, but set aside for any quarter of the first half of 2021 where receipts are less than 80%. So you only need a 20% drop rather than 50 of the same quarter in 2019. Again, looking back to 2019. You can do an election to look at the prior quarter. We won't talk about that. It's available though. So long story short, it's going to be a lot easier for businesses to qualify in 2021 than 2020, but I would strongly recommend looking at both periods. Once you do establish that you have an eligible quarter, you can start calculating the credit. We won't go through it in detail, but for 2020, the credit equals 50% of up to $10,000 of qualified wages paid in all 2020 quarters per employee through that time period. So that means in all of 2020, the max credit available per employee is $5,000. That's nothing to take lightly, right? That's still a lot of money. But for most businesses, like I say, when we analyzed it early on, the PPP was better. And so that's why they all did the PPP. But now that's all out the window and changed because you can go do both now, right? So why would you not take both? If you can get $5,000 per employee for 2020, do it. For 2021, the credit equals 70% of up to $10,000 of wages paid in any quarter during January 1 through June 30th of 2021. So this means that for 2020 only, the credit is equal to a max of $7,000 per eligible quarter per employee. So I mean, if you just do some quick math, that's a huge increase over the 2020 credit. This has the potential in 2021 particularly to be very lucrative for businesses paying employees. We don't have time to get into all the intricacies. Again, I want you to know there's a limitation when you hit a certain number of employees. You have to, when you hit 100 in 2020 or 500 in 2021, you have to be paying employees to not work. That sounds kind of weird, but that's one of the rules. And you generally claim this thing on Form 941, which is a payroll tax. I'm sure you're familiar with it. If you have employees, Form 941, or they made a new Form 7200 in 2020 when the credit would have exceeded the quarter's regular payroll taxes, so people could see a benefit now. That's why they did it through the payroll tax, so you could see money now, right? Rather than filing your income tax return and having to wait until this time of year to see any benefit. So that's why they did that. For businesses who are realizing, okay, I'm now eligible for 2020, I got to go back and claim the credit. What do I do? There is a potential fourth quarter true up you can do on the 941. I want them to drop some guidance on this though, because the way it's written in the law, I don't like it. Either they made a mistake or I don't like the limitations that they're putting on. I don't find it advantageous. So I'm curious to see how they're going to address that, if it was actually a mistake or not. Either way, you can go back and amend your 941s to take it for 2020. For 2021 credit, if the employer has less than 500 employees, it can elect for any quarter to receive an advance payment of the credit not to exceed 70% of the average quarterly payroll for the same quarter in 2019. Then you reconcile it against the actual credit, okay? That's a super high level of the ERC, but I wanted you to have this information. I think it's a really big deal. It's a bigger deal than people are hearing about. So if you had a PPP, I would strongly recommend going back and looking at the ERC. And if you haven't taken your, if you have not done forgiveness for your PPP, try to max the interplay with the wages, because you can't do the ERC and PPP both wages. You can do them both, but not for the same wages. So if your strategy was to push everything of PPP forgiveness to payroll, you're going to want to rethink that and try to push everything to non-payroll, up to 40% of forgiveness. That is one strategy definitely to look at. We are going to skip all the way down to PPP because we only have 13 minutes left. But I really wanted to talk about a quick update on the PPP because this is huge too, right? And this is opening up, like I say, today for a lot of businesses. And I've heard two different camps. The $284 billion is going to be more than enough and you don't need to rush. And I've also heard the opposite, where you want to get everything ready to go as soon as possible. So I can't say what's going to happen. We'll see how it goes today. I've heard some servers at some financial institutions have already crashed from people slamming in there trying to get some funds. So we'll see how it goes. Long story short, the PPP is back. You can reapply for PPP1, and you can also get a second draw, right? Several changes were made to the PPP and the CAA. And one of the most important changes is the first thing listed here. Congress made it crystal clear that there should be no adverse tax impact to PPP borrowers. That was their intention all along, but they didn't write the CARES Act very well. And so Treasury and the IRS had room to argue that expenses paid with PPP funds were not going to be deductible. That everyone was upset, and Congress was upset. That's not what they meant. They said, no more. The CAA clearly makes PPP funds not taxable income, and expenses paid for with those funds are not, or they are tax deductible. And this is true for all PPP loans, not just ones going forward. So going back as well. I will point out also that the category of eligible expenses has expanded now too. This is only for those who had not applied for forgiveness before December 27th of 2020. That's the date the bill was signed. So if you haven't yet applied for forgiveness or you're taking a new loan, you can use the funds for certain operations and administrative costs that you weren't able to use it for before. So now you have more room to use your funds. And if you haven't yet applied for your loan forgiveness and your loan is $150,000 or under, I would advise you to wait potentially because they're drafting a new simplified form for you to streamline that process. And then this slide just gets into the more of the details of the actual additional expenses that are available if you want to take a look. And then again, I just want to make sure that people understand too that the PPP reopened not only for a second draw, but which we will talk about in just a second. But if you didn't get a first draw or you didn't get the full amount you could have gotten, you can go back and get a first draw increase as well. So there's a couple of examples here in the guidance that we have of who could do that and how they do it. One big one might be partnerships, right? Potentially because they didn't include the general partner self-employment earnings in their initial draw, because if you remember, there was a lot of uncertainty there and we didn't have any guidance. And then guidance came out later saying that partners can't apply on their own, but the partnership had already not included them. And so they were like, well, what do we do now? So now they have a fix. Now they have an out and they can go back and apply for more of that PPP1. And then, as I said, there is a PPP2. It's a second draw, they're calling it, available for businesses now too. The eligibility requirements are stricter than PPP1 though. So for PPP2, you have to have used or plan to have used any first draw PPP proceeds by the expected PPP2 disbursement date. You also have to have fewer than 300 employees. This is relaxed a little bit if you have an NAICS code 72, which is like hospitality, restaurants and bars and hotels and stuff. And you have to also establish a drop in receipts this time of 25% by either comparing all of 2019 versus 2020 or one of the quarters versus the same quarter in 2019 and 20 has to be a drop there from 2020 to 2019. Or wait, 2020 has to be less. The amount available for a second draw is going to be generally determined by taking 2.5 times 2019 average monthly payroll, or if you're again in the hospitality industry and have that NAICS code of 72, you can take 3.5 times that amount. And if you're asking, how do I know if I have an NAICS code of 72 or not? If you look at your tax return, it'll tell you. And if it starts with a 72, then you can take 3.5 times instead of 2.5. The max you can take regardless is 2 million instead of 10 million like the first round. So either way, this is still a really helpful program for those hard hit businesses. Self-employed people, make sure you know you're eligible too. You can take a PPP1 if you didn't, or if you need an increase, or you can take a PPP2. I do want to point out that you cannot, again, take the PPP1 or PPP2 after December 27th, 2020, and then also try for that SBO live grants as well. So just remember that. And then also remember, you can't use the same wages for the ERC and the PPP. So you want to look at them together and max out before you file for forgiveness. And I do have some additional slides here for you. This is what I was actually going to cover before I knew the bill dropped, but I thought the bill was so important and had such important changes. I really wanted to focus there. I would like to take your questions if you want. Otherwise, we can go through the last noteworthy form changes, or you can look at them on your own. So if you have any questions right now, I can definitely help you out. Also, my email is amie.kuntz@rubinbrown.com if you have questions. Here's a couple slides. When speaking of the stimulus package early in the call, you mentioned that it will be $1,200 for married couples and $600 per dependent under age 17. Yes. So does this mean there's a gap for 17 plus dependents and they won't? That's correct. And they won't receive anything at all, or will they receive their own? No. So if you can be claimed as a dependent, so if you're 18-year-old living with your parents, you don't get anything, right? Or if you're a college student who's claimed by your parents, you don't get anything. The Biden proposal actually, changes that. And they were trying to actually change that last minute too. in the last week of December before it was finalized. But no, that under 17 is still the current requirement for the stimulus 1 and 2. Potentially watch for a change if a stimulus 3 comes through there. What documentation is acceptable to show? So there is some guidance on SBA.gov and Treasury. They have released how to calculate and what documents are showing. Of course, they put it out literally this morning when the program is opening to the rest of the world. But it's there at least. So you can use your return, you can use annual statements and quarterly statements and things like that. But I would look for that guidance on SBA.gov. They have that out there right now. Do you have to get forgiveness on the first PPP? Forgiveness, no. You have to have used the funds. You have to, I'm sorry, I should read the whole question. Do you have to get forgiveness on the first PPP loan to apply for the second one? And the answer is, doesn't have to do with forgiveness. It has to do with using the funds. You have to have used or have the funds earmarked to use by the second disbursement date, the PPP2 disbursement date, if that helps. Okay, I think that's all I see for right now. So we just have a few more minutes and I'll just go through this extra bonus stuff I have for you here for noteworthy form changes for filers. Just real quick, the Form 1040, if you haven't seen it, and they are still finalizing forms. When in history as a tax preparer can you remember this late in the game? They did move the start date to February 12th though, if you haven't seen that. So we're getting a late start probably to help software companies and people make forms and all that for all these changes that are just happening all the time. I feel so bad for everybody involved. But anyway, so the Form 1040 looks pretty similar to last year, basically, is what we're saying here. Still 3 schedules that go along with it. Virtual currency is huge. If you aren't aware, you have to answer a question that asks if you had any transactions. That's what they're after with this question. They moved it from schedule, I think 1 to schedule the very top of the Form 1040. It's like one of the first things you're going to see now is a virtual currency question. They are not messing around. The IRS this is a hot topic with the IRS. So they really want to know if you've had any transactions. They're not worried about if you're holding it. If you bought Bitcoin, I'll just say, if you bought Bitcoin 2 years ago and you're just kind of hanging on to it, watching it skyrocket in 2020 and you didn't sell it or move it around or anything, and that's the only thing you got going on, you don't have to answer that. What they're after is, did you buy, sell, pay anyone with it, things like that. Did you make any transactions with virtual currency? So just make sure that you're aware of this. And there's some good FAQs, and there's a notice as well that's really good I have here listed. If you are in that world where you're dealing with virtual currency, just know that it's property. That's how they treat it. Okay, so the same rules would apply if you were buying and selling things with oranges. I don't know. It's property. So just think of it as property. We talked about the charitable contributions already, so you kind of know that one. The deferral of payroll tax due, I want you to know self-employed people have this option as well, not just employers. So make sure if you're self-employed, you can potentially defer, but it's a deferral. So you're just kind of pushing it on to another year, right? Make sure that that's okay with you. And the payroll tax credits, just make sure that, again, self-employed people understand that you have ability to take this as well, okay? You have your equivalent leave, they call it. So make sure if you were affected by COVID, you got sick, or you were taking care of someone who was sick and you're self-employed, make sure that your tax person is looking at this for you. QBI, just kind of in the weeds a little bit, just a change in the calculation was made. Also, they have a worksheet now. If you remember, you're previously disallowed. That was not tracked very well. Any of my tax people know what I'm talking about. So they have a really complex worksheet now. I'm hoping the software companies roll it into their software, because I cannot imagine preparers doing all of these calculations. But that's there now. The NEC, if you were in this 1099 world, you are all over this for sure. So if you're not aware, the NEC is a new form. If you are an independent contractor, you're going to get a 1099 NEC potentially rather than the 1099 MIS. So just know that they just changed that. It's all the same rules. They just separated out the independent contractor non-employee compensation of box 7 from 1099 list. They just threw it on a different form. K1 changes, make sure you always are looking at the codes every year for my preparers. And the codes are actually moved for S Corp and partnerships. So if you're looking for that K2 or page 2 K1 codes, those are now in the instructions. The CRD, these are going to be a pain. I really feel like, watch out if you got people who had coronavirus related retirement plan distributions. This might be confusing. You got a new form to deal with, 8915E, and a couple notices to go along with it. So make sure that you're asking people if they took retirement plan distributions, if they want to designate it as if they're qualified to designate it, and if they want to designate it as a CRD. We already talked about these payments. You're good to go there. Guys, that's 3 o'clock. That's all I have. It has been my absolute pleasure to talk to you, and I hope to do it again. And you can always email me with any questions too.
Thank you, Amy. Really appreciate you coming and joining us today. Just as a reminder, we will be sending out evals, and we can send out the slides as well to everyone. Just give us about a week or so to do that, and you'll be receiving your certificates as soon as we get around to it. Thank you.
Thanks, guys. Bye.
Thanks.